I want to talk to you about the tax rules for giving or receiving cash. So here's an overview I want you to pay attention to. So there are some tax rules to know if you give or receive cash this year. So whether you receive cash tips as part of your job in the gig economy or are giving cash gifts to a relative, you need to know when and how to report that money to the IRS. So there are different rules and reporting requirements depending on whether cash is income or a gift, how much money changes hands, and whether you are the giver or receiver. And the first rule you need to understand here is that it's important to understand that it's not just cash, okay? And so if you when you think about cash, you gotta think about how the IRS views cash. And so I really want to talk to you about if you're doing a car, for instance, if you're doing property, if you're doing cash, if you're doing anything of an asset, there are some special rules that you need to pay attention to. So when we talk about tax rules for giving or receiving cash, obviously in today's conversation, we are focused on the federal aspect of things, but you also need to inquire with state tax authorities to see what the rules are for your particular state, okay? Now, every state has different tax rules for giving or receiving cash, so you want to make sure that you have the latest updates about your state. One thing I need to also say here is that you also want to make sure that you have proper documentation. So whether you are donating or receiving cash, you gotta keep a proper paper trail every single year just in case. And you gotta keep that paper trail for up to 7 years in case the IRS wants to really dig a little deeper and audit your return. And if they're asking questions, at least you have the ability to prove things. And the last thing I want to say here is that if you have a somewhat complicated situation for giving or receiving cash, it's just better to reach out to an expert. You can actually hire a certified public accountant, a CPA. You can reach out to an EA, an enrolled agent, or you can seek the expertise of a tax attorney to kind of help you out to really see. It really depends on how much we're talking about, though. I mean, if we're talking about less than $1,000, it's not really worth it. But if you're talking about tens of thousands of dollars, then it's just better to seek professional help to make sure that there are no mistakes that you are making. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let's talk about the rules you need to be aware of. So rule number one, you do not have to report cash gifts of up to $16,000 a year. So remember that number, $16,000. So what happens here is that cash gifts can be subject to tax rates that range from 18% to 40%, depending on the size of the gifts. And the person making the gifts must pay the tax, but thanks to annual and lifetime exclusions, most people will never have to pay a gift tax, okay? And it's one of those things where, again, this amount actually changes, though. The maximum amount of gift you can give actually was $16,000 in 2022. In 2023, it was about $17,000. And 2024, it's scheduled to go to $18,000. Okay, this is one of those things where you have to always be aware of the annual number. And so the threshold is per person, though, meaning a couple can give a combined gift of up to $32,000 in 2022 and $34,000 in 2023 to each of their children in a single year, for instance. So gifting cash to family members can be a significant component of an overall estate plan. And so making tax-free gifts of cash or any other assets to family members actually while you are living can be a great way to actually witness those family members benefit from those gifts. And it's one of those things where, but you know, there are some specific layers you need to be aware of. Some cash gifts, such as those people give to pay certain tuition or medical bills, are excluded from any tax requirements. So to be eligible for this exclusion, however, you must give the gifts directly to the school or healthcare provider. So it's one of those things where if you want to help a relative, let's say you want to help your niece or nephew or grandson or granddaughter, you really just need to pay the tuition fees directly to the school. Do not give the cash to the relative and then ask him or her to go and pay the tuition. No, the IRS is treating the situation differently. So the first rule I want you to remember here is that you do not have to report cash gifts of up to $17,000 to $18,000 a year. So this annual exclusion changes all the time. The amount changes all the time. Boss, I want to quickly remind you of today's topic. We are having a conversation about tax rules for giving or receiving cash. The second rule you need to be aware of is that excess gifts require a tax form. Okay. Now, what does that mean? If a person's gift exceeds the exclusion limits, they must file Form 709 to report the excess gifts to the IRS, but that doesn't mean that they will have to pay taxes. They just need to file the information. And you can see on the screen here is how 709 Form 709 looks like. Now, it's really important to understand that filing Form 709 doesn't necessarily generate a tax right away. And so that's because in addition to the $16,000, $17,000, or $18,000 annual exclusion, there is a $12.06 million lifetime exclusion for the 2023 tax year. The excess amount goes against the lifetime exemption. Okay, so married couples who file their tax returns jointly may also have to file a Form 709, even if their gifts are less than $17,000. Let me give you an example. A husband and wife could each give $17,000 to their child, but they will need to report the $34,000 to the IRS on Form 709 to actually properly split the gift between them. And keep in mind that cash doesn't actually have to change hands for a gift to have tax implications. So if you're paying for a wedding, for instance, that does really trigger the gift tax. Okay. And parents who spend more than the annual exclusion amount on a wedding for a child should file a Form 709. And however, it's one of those things where you want to be on a good side of the law, right? So you want to be proactive, you want to be transparent, you want to be forthcoming. So before any problem arises, okay? So 709 is actually your go-to form when it comes to gift taxes, irrespective of the situation you find yourself in. Okay, it's always better to over-report, so to speak, than to under-report. And one thing I want to say here is that there is a penalty called a failure to file, and also a penalty called a failure to file and a failure to report. So it's one of those things, a failure to pay rather, a failure to file and a failure to pay. Okay, so those are two situations where you do not want to actually draw the ire of the IRS. Another rule you need to be aware of is that the donor is responsible for gift reporting and taxes, not the recipients. This is really important. So if you're listening to me right now, right, and you are considering giving to your relative or giving to anybody else, whatever, you, the donor, you are responsible for gift reporting and taxes. Do not expect the recipient to actually keep some paper trail or let's say report the data to the IRS. No. So when it comes to reporting gifts and paying any taxes due, the burden falls on the person making the gift. The recipient doesn't have to do anything at all. And this regardless of their age, of their situation, whatever. They don't have to do anything at all. So depending on what the recipient does with the gifts, there may be future tax implications, such as paying a capital gains tax on an investment. But someone accepted money, even in excess of the annual exclusion amount, doesn't have to worry about reporting it to the IRS. And again, it doesn't matter if the cash amount is $100 or $100,000. Okay, and so for documentation, it's important to keep records of all those transactions in the form of account statements and any tax filings that may go with them. Okay, and regardless of whether you are the recipients or you are the donor. The bottom line here is that it's always better to, again, going back to what I said, in the spirit of transparency, it's always better to keep a paper trail so that if, God forbid, something were to happen and the IRS is going to audit you, the recipients, you have proof, you can always provide all kinds of documentation. And this also applies to state taxes. So basically, the requirements of a donor actually being responsible for gift reporting and taxes, but not the recipients, also apply to state taxes. And this applies across all 50 states. So you are, by default, you, the donor, always are responsible for gift reporting and taxes. And the bottom line here is, now there could be some situations where some states have different, I would say, laws or tax models, but you just want to call your state tax authorities and ask. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about tax rules for giving and receiving, or giving or receiving cash. Another rule I want to share with you is that capital gains tax may apply to gifts accruing value. Okay, so the gift tax can apply to both cash and non-cash gifts. So if you receive, let's say, a non-cash gifts, you may end up paying a capital gains tax on a portion of its value, even if it falls below the gift tax exclusion. For instance, let's say someone gives you stock valued at $10,000, but they spend only $1,000 to buy it. Okay. Now, when you sell those shares, your capital gains will be calculated based on the original purchase price. So this amount is known as the basis. So when we talk about stock basis, this is basically the $1,000. So if you sell the stock for $10,000, you'll pay capital gains tax on $9,000, which is really the sales price minus the basis. Remember, again, the basis is $1,000. So in some situations, such as the gift of a home, for instance, the recipients could be facing a significant capital gains tax if they sell the property. But if you have inherited a house instead of receiving it as a gift, you can avoid this tax burden since the basis for inherited property is reset to the market value at the time of the owner's death. So it's one of those things where you have to be careful here. And this, again, you want to check with your state tax authorities what the rules are for your particular state. Okay, not only in terms of capital gains tax, but also in terms of gifts, whether you received a home or you received anything else of value. You always want to make sure that you are on the right side of the law. You are on the right side of the law. One thing I also want to say here is that if you have a quote unquote complex gift or a state tax situation, it's always better, as I've established before, it's always better to reach out to a specialist who knows the particulars of the law in your area. Okay, you can reach out to an enrolled agent. You can reach out to a certified public accountant, or you can reach out to a tax attorney to kind of help you out. If you have questions, please let us know in the comment section. We'll be really happy to help you out. Our team will look into your situation and answer you. But please, when you reach out to us, you want to mention your city and state. Always. One thing I want to say here is that you don't need to report payments between individuals, okay? And so for monetary payments, they are not gifts. You likely don't have to worry about any tax reporting. This is important. I'm going to repeat it. For monetary payments, there aren't gifts. You likely don't have to report any tax. You have to report about any taxes. For instance, there is no need to tell the IRS about the money you paid to the person who mows your lawn, for instance, walks the dog, or paints your spare room. The same goes for cash you received for most items you sold privately. That is, unless you are buying items to resell online or making regular income from your sales, then your activity could constitute a business. In that case, you will need to report the money as income on a Schedule C or other business tax form, whether it is Form 1065 or Form 1120S or Form 1120. And so while it's really common for people to pay one another via services such as PayPal and Venmo, a new IRS reporting requirements could cause complications. So starting with the 2022 tax year, those who receive payments of $600 or more for goods and services via third-party payments processors will receive a Form 1099-K. And previously, this form went only to those who received at least 200 payments that exceeded 20 grand. So it's important to understand that if you do not categorize a payment correctly when you send it, there is a chance the recipients could receive a 1099-K at the end of the year, okay? And if you have it, the IRS has it. And in the event you receive a 1099-K for payments you received from family or friends, you have two options. You can try to see if the payment processor can correct the error or report the money on your tax return. So it's that. And it's always important to understand that most payment services allow users to include a note when sending money. And so you will always want to really contextualize the gift or the transaction so that you have a clear idea. You have all the disclosures possible to really, again, going back to what I said, contextualize the transaction so that you do not get hit by a gift or a state tax. Another law I want to share with you here is that you need to report payments of $2,400 or more made to household employees. And this is kind of important. Now, while you don't have to report most cash payments to the IRS, the rules are different for some domestic workers, including nannies. So if a person works exclusively for you and you dictate how they spend their day, the IRS will likely classify that person as a household employee. So once you pay an employee $2,400 or more per year, you need to begin withholding Federal Insurance Contribution Act, so FICA tax, for Social Security and Medicare. So the cost of FICA is split between employees and employers. So you will need to pay half the 50.3% tax. Plus, you may need to pay unemployment taxes as well. So if you have a household employee, you might want to apply for an employer identification number from the IRS. You also need to give your worker a W-2 each year and actually file a Schedule H Form 1040 with your own taxes to report the income you paid. An accountant may be able to assist you with this process, or some tax software companies have programs for those who want to manage payroll themselves. So the rules are slightly different if you own a business. In that case, if your business pays someone to do work, such as cleaning your office, and you are not their sole clients, you may need to issue a Form 1099 MIS instead. So you are supposed to issue a 1099 after $600 a year in earnings. And the seventh rule here is that you must claim all income, even if you're paid in cash. So in recent years, many people have embraced gig work, which really enables you to work remotely and on your own schedule. So those receiving cash payments for any work, however, should be mindful of their obligation to record that income and claim it on their federal tax forms. So the bottom line here is you must report money from freelancing, consulting, or other self-employment, even if you don't get a Form 1099 from the person or company who paid you. Okay, the IRS is not concerned with your teens' babysitting money, but you could face penalties or audits if you're making full-time income from gig work and fail to report it. So in the event of an audit, the government will actually compare deposits to your bank accounts against the income you report. And cash may seem like an untraceable way to give and receive money, but IRS regulations still apply. So whether you are gifting a gift or paying a worker, make sure you understand these crucial tax rules. Thank you so much for your attention. I really appreciate it. Today's was a conversation about tax rules for giving or receiving cash. And here's a recap. So I gave you the overview, and then I explained to you every specific rule regarding giving or receiving cash. Thank you so much for your attention. God bless you. I'll see you next time. Until then, remember, stay marvelous.